it typically has that effect during the market opening for London market. A lot of times it does make a pretty significant move within the first 5 minutes. And then it'll either stay consistently volatile or it might start moving a little bit quicker as the session goes deeper. But primarily, I wanted to focus on the wicks and the candles price action today, so you guys can understand how these market prices move and how you could potentially identify the price movements, as well as get into a good trading habit and look for signs where there might be a reversal. Okay, so right as we see here, right at 1 a.m., it had a pretty significant drop. And it looks like soon as it dropped, it was temporarily oversold. And then it was contracting near the 135.346 area. It tried to break that support level. It looks like there's a support occurring around the 135, 160 mark. Couldn't break it. Looks like it was pulled back. This area most likely was oversold, because as soon as it hit this low, the lower low, it couldn't hold onto that price. It pulled back immediately back into the 135, 160 zone. And then it drops again. And now we have London open. And then, of course, we're trading near support level, and we're seeing constant wick action near the 135, 200 mark. And I see another nice long wick. So at this point, I'm considering for a possible reversal. So overall, it's been downtrend from this end, although we had almost a reversal here, but it was pulled back immediately. Having said that, with the amount of wicks that's occurring in the 135, 160 zone, the amount of support that I'm seeing, it doesn't look like the sellers can move past the 135, 160 zone. And then with this newer candle being formed, and it's creating a higher high and a higher low with this much momentum, I'm starting to see, okay, this probably is going to be a good long position at this point. So that's what I'm looking at. Let's see what happens if we go forward a period. What do you know? It does end up going up. Just like how it is with any other pairs, especially with London pairs, even during a certain trend, you're going to see minor retracements all the time. I'm not stressing here, even though it had a bit of a pullback. At this point, I'm still in my buy position based on what I've already seen, right? So let's say I've entered into buy right there. Of course, this is all hypothetical. I'm showing you guys a back-tested data just to show you basically what I'm thinking, what a professional trader is thinking when they're trading price action during the London market. So, okay, so let's go ahead and see what happens. Okay, so currently this buy position will be in a drawdown. Okay, so drawdown is when you're in a negative equity. So this position is currently in the negatives. Okay, I want everyone to understand, just because you're in the negatives when you're scalping or swing trading, I mean, obviously in a perfect world, you want to execute and snipe these positions that's going to be immediately in profits. Realistically speaking, guys, it's not always going to be the case. Most of your trades that are going to be profitable will be at a loss at one point or another, and there's nothing wrong with that, right? And this is where psychology come into play. What do traders do what is like one of the number one mistake traders make? When they get into the position that's actually a good position, they start panicking because of this minor drawdown, right? Let's actually put a graph. I thought I had my long position here. Hold on. I want to show you guys what a physical tool that will show you the areas where I'm in a loss. So the red area indicates I'm in a loss right now, okay? And what most traders do in a situation like this, they'll panic. They'll be like, oh, wait, it looks like I missed my opportunity to take profit or be into a profitable trade. Most traders will actually, most terrible traders will take a loss here because he'll think or she'll think, oh no, this might actually break past the support level and I might hit margin call or whatever. I might lose more money, whatever the case is, you know, and they'll take the loss. What do you think will happen in the next couple period? Let's watch. You guys see that? This is what I call price action trading. We sniped that entry. We sniped the fuck out of that entry. Could you imagine how stupid you would feel as a trader if you took a loss here just because it was in minor drawdown? Just think about how stupid you're gonna feel. Let's say you did like a big standard lot size of one lot because it's London session trading, and you know some of you guys are like trying to get quicker returns more quickly, and you're over leveraging your trades, right? Which is not always a bad thing. But if you don't know what you're doing, yes, it could be a bad thing. So let's just go back for a second. Okay, we're just gonna go back and start where that had occurred. So remember, I entered a buy position here based on the fact that I'm seeing a constant loss in momentum near the 135, 160 mark. Okay, so it's creating a higher high, higher low, and not to mention lots of wick action happening in the lower end, and this was oversold. A lot of price actions basically pointing fingers that most likely we're gonna see the price go back to 135,900. That's what I'm thinking as a trader, London session trader. This is exactly what I'm looking at, right? And then what happens next period will have most traders start panicking and take a loss. Okay, because a lot of traders that don't know how to trade will start panicking right after seeing this, and they'll take a loss because they'll think, oh no, this is going to continue to drop and might even hit the 135, 160 mark, and I'll be in a crazy drawdown, or I might get a margin call, or whatever the case is, especially if you're over leveraging, right? But I wasn't phased. I wasn't, that's minor. That's all part of the trading game for me, right? So I hold on to my position and I place my stop loss below this trend line, or somewhere around the below the support level. That would be a good stop loss, right? Because very unlikely it'll hit my SL. My first SL would be around here. My second SL would be here. Like depending on the situation, I'll move the SL. Depending on the wicks and the candles price action, I might move it between the SL1 or 2. But for sure, the lowest SL I will do is right below the lowest candle period here. That would be the lowest. But most likely, I'll just place it right below the 135, 168 mark, just because you know that was the last support, one of the primary support levels. So you know, safe, unlikely to hit, and if it does, then it's all part of risk management. That's what I was thinking when I was trading this. And then, you know, I keep holding my buy, and then boom, skyrockets. Realistically, even right after I hit past 135,900, I'll have my trade trade window open, waiting to snipe close that position, because I'll know for a fact that this is gonna be oversold very quickly. And as you can see, there's a wick happening right here. So it's good to not get too greedy and take profit. And if it continues the trend, you can always re-enter. And that's what I'll be thinking. So that's basically how you can snipe a very profitable trade during the London session. Just gonna stop the recording here, and I'll